Welcome to Unit 4 of the course. In this unit, our topic is business acquisitions and dispositions. There are many tax rules that impact the acquisition or disposition of a business. In this unit, we focus on those that are most important to online businesses, which are the rules for transactions involving intangible assets. A huge part of the assets of an online business is intangible assets such as software, patented technology, trade secrets, and know-how. This unit focuses on the acquisition of intangibles, especially Section 197 intangibles and the subsequent accounting for those assets, the transfer of intangibles to a new business, and the disposition of intangible assets. First, we will learn to identify Section 197 intangibles, including transactions that trigger the application of Section 197, and those assets that meet the definition of Section 197 intangibles. The importance of knowing these rules comes primarily from the fact that the cost of Section 197 intangibles must be amortized over a long period of time, 15 years. Next, we examine the transfer of intangibles to a new online business. Because the transfer of an intangible can be accounted for in various ways, depending on the rights in the intangibles that are transferred, one of the key considerations is properly characterizing the type of transfer. For example, we will learn to differentiate between a complete transfer of intangibles, which can be a tax-free transfer, and a license of intangibles, which is taxable. We will also learn to differentiate between a taxable transfer of services and a tax-free transfer of intangibles. We will also explore the implications of receiving stock in exchange for intangibles. We will look at, for example, the implications of receiving restricted stock. Finally, in this unit, we explore the tax rules for disposing of the assets of an online business. We will study the special rules for disposing of Section 197 intangibles. We will also learn to differentiate between sales of intangibles that give rise to capital gain versus those that result in ordinary income. These latter rules come into play when we are disposing of software, website content, patents, trade secrets, know-how, and domain names.